Good evening, ladies and gentlemen. Welcome to Stocks to Buy episode. What are we on now? 24, just before the holidays here, and I am sick. I have been going through a roller coaster. I've not been putting out as much content this week, and today I went through the roller coaster yet again. I took me all day to make that little video, and then I crashed for like 4 hours. I slept in like till noon today, and somehow I'm like, I still want to do a damn stream, and the wife is like, can you never just take a break? Maybe it's because you never take a break, but here we are, folks, because I want to break down the net worth of what me and my wife have been able to accomplish. I want to talk about what it takes to get rich, why I'm hoping, I'm dreaming my goal, baby. Not that it really matters, because to be a millionaire these days feels, very, I don't know, not like it's worth a lot. Like, I mean, in Canada, to be a millionaire is to be middle class. It doesn't feel special when you live in really rich areas. I'm sure me, Kevin, probably worth an arm and a leg, but in California, to be worth millions of dollars isn't to be worth crap, because your standard of living is so goddamn high, right? Like, anyways, I want to break down like some really interesting facets before we break down my assets and how I've been able to basically get over 900,000 this year. I want to talk more or less about kind of the components and how interesting these components are. I think there's about 4 major ways to get rich, and everybody's always playing all of these together in very different ways. But first and foremost, what I find most interesting, because we're going to break down some of the market details too, is we're in a very greedy market right now, and it's really intriguing to me because I think we're almost back to a place of full normality. Like, there's very few places where there's still going to be discounts that are going to exist that we're going to talk about, but we are back to a place where I wouldn't be surprised if the market decides to sell off somewhere at the beginning of the year, similar to past years, and we're going to discuss why that might happen. It's not stopping me from buying. It's definitely going to slow down my path to becoming a millionaire, because the market needs to stay up for me to get to that goal. I'm just trying to obviously kind of give you guys my honest opinion on what I think is going to happen here, but I still think we're going to see some pretty good highs next year, and I'll break down why as well. But these 4 facets to becoming rich that I just think are fascinating, because everybody that builds wealth will get it through one of these 4 facets. Faucets, I don't know. My wife hates when I use that word because I don't know if I'm using it correctly. But basically, you can start off by gambling, right? And gambling is a huge proponent, I think, to so many investors out there. We see it on YouTube. Like, people thinking just because they can look at numbers on a screen, they presume they understand a business. And if 2021 didn't teach us anything, things can become trends. They can look great on a balance sheet, and then you shift 1 year later and a whole market sentiment changes, and then all of a sudden, like, you didn't look as smart. Like, investing is more, almost to some extent, depending on what it's gambling, really. At the end of the day, most of it is gambling. You don't really know what a business is going to do. If you ever started a business, you understand the complexities of how hard it really is. Basically, everything to some extent is gambling. When you cross the street, you're gambling. You're not going to get hit by some guy that's going to run the red light, right? The pessimist tends to survive, but to some extent, we're all gambling. But it's a huge proponent of how some people truly become rich. I mean, some people just get it through lotteries, right? And that's why most lottery winners don't keep the money, because to stay rich is also a very big challenge. Now, you could marry rich. This is something that's very important, because I think all of us, to some extent, want to marry rich. And when I mean rich, I mean somebody that might not have money, but might have a money mindset or have a longevity mindset where, they care about their health. They care about investing in their future, right? Whether it's working out, whether it's, getting a job, whether it's supporting a household, not going into debt. I think this is probably one of the most important proponents to getting rich, because, everyone's just like, oh, Kyle, like, you don't have that much money and blah, 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 blah. I'm like, yeah, you don't have as much as you're saying. It's like, well, when you get married, we're kind of combining our assets together. So it's like, well, mine is hers, what hers is mine. I think getting married or finding a significant other is one of the paths to not only building wealth the quickest, but also the path to destroying wealth the quickest. It's one of the scariest things you can possibly do. And there's always risk along the way that comes with this. So it's a very interesting perspective, because some people are just born rich. Some people marry into being rich. It's definitely something to pay attention to, because it can make or break your life. Now, you can also start a business, right? You can always, it's very hard. I don't think there's anything harder than starting a business. As a guy that's tried to run probably about a dozen businesses, almost all of them have failed. The business that I ran for a decade pretty much failed in the pandemic, pretty much went bankrupt on that. Like, I have run businesses. I've seen them come. I've seen them go. I make 6 figures running my own business. I've been around the block when it comes to this, but you will never become like Elon Musk kind of rich. Well, actually, you probably can. And I'm going to explain this in kind of the next facet of, and when it comes to investing. But starting a business, I think, is something that every single person should do. Whether you might not become like an Elon Musk, change the world in that aspect. But the reason you want to own a business and probably also work for somebody is because you get so many tax benefits and write-offs. There's no way to take advantage of building real wealth if you don't understand how businesses work. And it's really hard to invest if you've never run your own business, which I also find hilarious. A lot of people on YouTube, they work jobs, yet they're going to come on here and tell you how to invest. Like they actually understand how businesses operate. Again, if you run a business, especially in specific sectors, it's going to give you way more knowledge about things people are doing than somebody that's just sitting behind a screen looking at a few numbers, right? It's another big problem, I think, that comes into the YouTube side of it to what a lot of people are spitting. But the other way to get rich, and probably the most easiest for most of us, is the slow and steady, just invest. Now, investing can be pure gambling. It can be broad-based and low-risk investing with index funds. But the fact of the matter is investing is probably the path for most people to build an absurd amount of wealth. And when I mean build an absurd amount of wealth, I mean, it's really intriguing that one of the 10 largest companies in the US is Berkshire Hathaway. And the fact of the matter is Berkshire Hathaway, when it comes to Warren Buffett and Charlie Munger, especially Warren Buffett, he didn't actually achieve the vast majority of his wealth until he was over 65. And I think this is what blows most people's minds, is that Warren Buffett didn't become worth like these insane, like, tens of billions of dollars within like the first 30 years of his life. Like most people give up before they keep going that long. Like if Warren Buffett retired at 65, he'd have been worth, I think, what was he worth? Somewhere between $3 and $5 billion. Like he was a billionaire at this age, but the vast majority of his wealth wasn't created until the 30 years after his 60s, right? So I don't think people understand that like it's a time thing. Anybody can get rich that is young if you have some capital to invest and you have a lot of time. But most people want to get rich quick and they want to gamble. But the fact of the matter is everybody can get rich. Getting rich is super easy. It's just avoiding one contributing factor that really plays into all of this, which is crazy, right? Which is what Charlie Munger says. His number one tip to living a long, happy life is avoid crazy at all costs. Avoid a crazy wife. Avoid crazy friends. Avoid crazy debt and crazy spending. Like if you just avoid crazy and you dodge most of those bullets, the likelihood of you coming out very rich toward the latter half of your life, it's pretty much a guarantee because it's worked for me, right? Like I avoided, getting engaged to a crazy person. As far as I can tell, it's 7 years. We still seem to be doing great. So avoided the crazy person. I did the debt thing super young. And you got to remember, Warren Buffett started investing when he was 11. He had 10 extra years of compounding than I did because I decided to take out stupid debt when I was 19 years old that I didn't really pay off till I was about 23. So I started when I was 23. I learned really quickly to avoid crazy debt because it makes you nuttered. Like, I mean, all these things contributing. Like I avoided gambling and getting crazy and doing crazy bets. I avoided gambling with all my money. I mean, crazy. I don't think I realized the significance of this quote until you really start breaking down how crazy really bakes into every aspect of your life. And yeah, I bought a motorcycle. That's probably, I don't know if you want to call that crazy, but it's on the spectrum of being crazy. I'll give you one anecdote to owning a motorcycle, man. I don't know anybody that drives a motorcycle full time that hasn't had an accident or isn't dead. I'm just saying. People that do it for fun in the summer once in a blue moon, they're usually fine. But anybody that drives a motorcycle full time either ends up in an accident or dead. Trust me, I've known a lot of people. But moving forward here, before we break down my asset allocation, I really do want to talk about where the market kind of currently sits and just taking a look and zooming out because I just think it's fascinating. I mean, you take a look at the S&P 500 in comparison, you can kind of get a little idea of the lines here. I just wanted to put them together because it's just neat to see, what the in and out flows are doing currently because it stands over the last day. Most of the market pretty much recovered from the drop that we experienced, that one day crazy crash that most people don't want to say was a crash, but it was a significant single day drop, unlike stuff we usually see within the market. And I think whoever did that is probably likely regretting it because if we zoom out over the 5 days, you can see that drop followed by almost that immediate recovery in almost all the indices. But what's most intriguing, as mentioned, I threw the Canadian banks in here just because I made a video about it today while I was dying. So I hope that video comes out all right because I know I missed a lot of information, but the YouTube algos, they want to keep making content. I want to keep getting paid. It's the job. So sick or not, I'll try and show up. But the BMO equal weight Canadian ETF is the purple line. And it's kind of just neat to see that it's actually outpacing all the major indices here, the Russell 2000, the NASDAQ over the last week. So the banks are definitely exceptional here, especially the US banks, JP Morgan, all that stuff. But as we zoom out again over the month, we can see the banks are definitely keeping up with the Russell 2000. And it's these, again, this was like the big bet that I had was that the lower half of the market, especially when it comes to banks, especially with small caps, the likelihood of the recovery is going to be much greater because banks were trading at multiples that were under PEs of 10. The Russell, I think the Russell, I don't know about the whole Russell, but the small cap value ETFs were trading at PEs of 10 and 11. Like and there's still room for them to grow. I mean, they were the most hit. They're still down a lot, and they still have a lot of recovery in their earnings, in my opinion. I could be wrong. I'm gambling on that. There's speculation involved in that, obviously, right? But again, we zoom out over 6 months and we can see that like everything is kind of just following suit here in a very fascinating fashion. And then once we get into the year to date, this is where we start seeing the segregation of tech. And again, I don't know if this is a good defining factor to be like, everything that's been beaten up is undervalued. Because again, you look at the bottom half of the Canadian banks, you look at the bottom half of the Dow, the Russell 2000 are all underperforming the S&P and the NASDAQ because of tech, right? Tech has been really driving the way. And then we'll just kind of push it out to the 5-year here, and you can kind of start seeing the big segregation between everything, which is fascinating. It's anecdotal. It doesn't really mean anything. People like to draw strings at whatever's going on here, but the fact is we don't know. Is tech overvalued? It looks overvalued, but you don't know what next year brings. Maybe earnings start to go up again dramatically, and that's going to be one of those contributing factors. But over the last week, it hasn't been tech. Again, it has been that lower half of the market driving the returns. We've seen outflows of major tech companies, seeing big inflows into the bottom half of the market. It's nice to see Google doing very well. That was a fun little bet we've been joking about that I haven't bought. I haven't really bought any stocks I want to buy. I was reading some comments and they were like, see, you shouldn't have bought the banks or TELUS. The U.S. market's been doing better. It's like, well, most of my money's in the U.S. and I haven't bought TELUS outside of the shares the wife owns. I want to buy it, but I'm not going to start buying stocks until I can get my tax advantaged account. So I've been sitting pretty in the indexes and they've been working great to my favor, as we'll see. But look, the Canadian markets over the last week, again, doing pretty well. Oil coming back. Banks doing well. It's all great, right? But there's still some red herrings. There's still some stuff you need to be concerned about. As much as I want to believe that the market's just going to keep flying, you know that it's not. There's no reason for it anymore. The valuations have kind of come into play unless we can see some material difference in earnings. And the reason I don't think we're going to see some major material difference in earnings is because there hasn't been an interest rate cut. And we're starting to still see the signs of these interest rate concerns on the end consumer. The end consumer is being a little bit more frivolous with their money. I mean, you can see it in luxury brand-based companies like Nike. Like Nike lowered guidance. The other concern too is how is FedEx lowering guidance when Amazon is doing so damn well? Is Amazon just shipping all their own stuff now? Like, why is FedEx lowering guidance? I mean, these shipping companies should be just doing, static, or either that or the market just says, hey, like, even though their earnings are still going to be good, maybe it's just they're a little bit high flying here for what's expected. I really don't know, but they're trading at a reasonable value, in my opinion. FedEx, we'll see what happens. But again, there is some concern still within the market environment. So you got to be a bit careful, right? But my biggest fear, and the thing that I have the biggest concern about, and as much as I'm still going to like saying that Google is probably the most undervalued stock in the tech world you can buy, is because it is. I mean, you look at companies like Amazon here, and their earnings have not recovered. They've come back, but we're not back to where we were post-pandemic here. I mean, the market for the last decade was so astounding that we're not there yet. These companies are trading at multiples as though they are. And Microsoft should be a great example of this. Apple, I mean, look at this. I mean, the earnings, when you look at the bottom line here of the year-over-year quarterly growth, the reason that the year-over-year quarterly growth has come back so much is because if you go back a year ago, there was no growth. They were flatlining EPS, like it was hardly growing at all, right? And I mean, there's no revenue growth. Like it was just starting to flatline a bit. And now we're starting to get these peak back up. So I'm curious if we can sustain kind of the trajectory that we've been on here, especially from the revenue standpoint, and get back to a continuation of what we saw, where we were. And again, like if we can't keep up that growth, and you see it again, look at the price to earnings multiple here with EPS. EPS, like if you go back from this time pretty much till what was that? 2022, like the middle or the first quarter of 2022, we're not really that much higher on an earnings per share basis. We're just not. But when you look at the multiple we're sitting at 36 times, I mean, we're at the highest multiple Microsoft has ever sat at a period where there's been no bottom line earnings per share growth to any material factor, right? So it's a scary time from that aspect, especially when you go back and you look at the fact that there wasn't really a lot of earnings growth. It's been the last several years that have been the most beneficial for companies like Microsoft. But again, you kind of really got to rely that that's going to continue into the future, especially when you're paying these high multiples. Now, I don't really care because I'll buy them either way. I'll buy them through the indexes and I'll buy them high, I'll buy them low. I didn't know NVIDIA was going to moon, but you own the index. Now NVIDIA is like the third or fourth largest position in your portfolio because it's auto weighted. So it doesn't really matter. That's why index funds that are passively weighted by market cap are so beautiful, because if these companies become out of favor and the lower half of the market comes up like it has been, hey, you still see the benefit of both sides of it, right? So, I mean, that's again, the easiest thing to possibly do without gambling too hard. But if you were going to gamble hard, again, Google, I think, has some real potential here. We've talked about it relentlessly. It should be worth technically up toward at least, closer to what Apple's worth, maybe not as much as Apple, but at the same time, I can't foresee why it's not. But still, you can take a look at a lot of companies too. We've seen a full recovery in most companies. Visa stock's at an all-time high. Home Depot's come well off its lows. It's kind of recapping, basically back to where it was when it started dropping in 2022. The banks, especially in the US, JP Morgan's pushing back toward its all-time highs. I mean, the easy money's come and gone. I mean, you've had a good year and a half to accumulate. So if you weren't cost averaging indexes, you damn well better been buying something, because you, again, missed out on one of the greatest buying opportunities of a lifetime. And they don't come very often. This has been, I think the pandemic is the first time in 10 years. And then we've kind of been getting these sputtering effects thanks to the government's money printing. But at the end of the day, the next bull run's not coming until interest rate cuts happen. We're going to materially be bobbing around. I think we're getting this kind of hopium rally. That's great. It's awesome. Like, a lot of it, I think, is deserved with the lower half of the market. For sure, there's been some undervalued players. There still is, but it doesn't materially make sense until we see it on the earnings per share, right? And as I mentioned, when you stop raising interest rates, that means anybody that's affected by them that have high debts, infrastructure companies, they're going to see a leveling off, because those payments are going to stop going up. But then we won't see a material impact until they can start adding those payments back to the bottom line. And that's all hearsay. We don't know when they're going to cut interest rates. It's inevitability. It's a long-term inevitability. There's too much greed in the market, and people want to go back to the good old last decade of, being able to inflate the market, with money printing and quantitative easing and tightening and all this stuff, and low interest rates, which, again, inflation was under control. Interest rates don't have a huge impact, in my opinion, on inflation. I don't think asset prices increasing have anything to do with inflation as much either, right? It's just money printing at the end of the day. That's all the government is really doing. So let's talk about, where I'm currently sitting, my goals for next year, this plan. If everything works out, we could become Canadian millionaires, which doesn't mean F all in this market, because in the US, it means we're worth maybe around 800,000 US dollars, which is still great at 32. I mean, I'm 32 in May. So, I mean, it's definitely something that I've mentioned is kind of an incredible task to achieve when you lock yourself in frugal mode and cheap mode for 8 damn years, and you do nothing but live as cheaply as humanly possible. And you're only making 40 grand a year, and you're trying to save 50% of that or more. It was a daunting task that I'm slowly starting to burn my way out of. Because I am getting exhausted. I've got a good 1 or 2 years left in me, but like, I'm working, I have 3 jobs, I think. I'm doing a lot of work, to make the kind of money that I'm making. I don't know if it's the most efficient way of doing it, but it's putting us in a position of obviously extending wealth, but I don't want to burn myself out and die young because of it either. So let's just take a look, because the market's, from an asset standpoint, I just want to break down where it kind of stands, because I only ever show you my portfolio, and I'll show you the combined portfolios when next year rolls around, because I'm going to do a full rebalancing as we shift all our assets from regular brokerage accounts into tax advantaged accounts. We're going to take the profits we made, put it into our RSP. Luckily, the wife has some room. I'll have some room that'll avoid some of those taxable gains. And then we can start rebuilding back our tax-free savings accounts. And my goal primarily in the next 5 to 10 years would be to get that 100 and I think odd 70,000 I'll have in taxable, tax-free room that I've withdrew to buy a property back in that TFSA. But as the asset classes break down, as I've shown you, we're up pretty decently, about 14% from my side of it on the S&P 500. I myself am getting close to getting back over that 200K mark invested. We're already over 200K with the cash on the sidelines. VDY is now up 6%, which is nice over last week. I think we're up another 1% or 2 there. The VDY continues to trickle a little bit higher, which is nice to see. So all in all, pretty good from that aspect. But this is a really small positioning, I think, between me and my wife. I think we've had probably over 300,000 in good core holdings together. We have over $500,000 in value in the piece of real estate that we hold, probably a little over that, depending on what real estate's doing in the city of Toronto. We got a nice, our 1,300 square foot condo that we were able to get. So there's a good chunk of value in there. I'd like to get it at parity, where I get about $500,000 in cash. So we have $500,000 invested. And well, I mean, we're technically almost there anyways, because we have 300,000, what I would call retirement kind of investments. I've got about another 120 odd thousand, I'm going to say, in more private investments, which I'm not really going to talk about as much on here, because to me, they don't exist. I don't talk about them because it's what I get paid for, helping people run their businesses. I get paid in private equity in their business. It's not a public company. It's very illiquid. It's a very, God knows what 3 years is going to bring. It could be worthless. It could be worth a lot more than the 100 grand or whatever I have in them. Because I think I have about 3 or 4 private companies that I own shares in now. that I'm helping outside of here. That's kind of taking on some of these other jobs. It's fun. It's great. I'm getting a salary on top of some of that stuff, which is cool. But yeah, so combining all of that together between the property values, the private equity, the Bitcoin, precious metals, the other speculative stuff that we own, the cars, the stupid intangible stuff that I don't calculate, we're probably sitting much closer to about 900,000 in investments. If you combine everything, but I really don't consider everything the total pool of it all. Because again, it's all kind of, there's some speculative play in there with probably about 120 to 40,000 of it, because some of it's, again, crypto gold. I don't consider any of those real assets. My car is going to be worthless in the next probably 4 years, whatever. There will never be a when Lambo. There's only ever been, there's never going to be a when Lambo. There's never going to be a Starbucks coffee. I will never be rich enough to do that crap because it's not my vibe. It never will be my vibe. I thought crypto was whack, people. It is totally whack. It is 100% whack. I think it's purely speculative and gambling. 98% of it's going to go to zero. You're better off trading it. You can make some good money, but I own a super small percentage of it because, we went down that rabbit hole. We learned a lot about it. We took some losses on it. We got out, and I kept some for nostalgic stake, just like I own MindMed. Like, we still got MindMed, still got a lot of speculative companies. We took our profits on some of them. We lost some on others. But you just, like I said, it's not a material enough to make a huge difference. Probably like a couple grand or a few grand worth. It's nothing crazy. I honestly, we haven't even looked. I think my wife did a little while ago. I haven't looked at the crypto wallet since the crash. So I honestly can't tell you what it's worth. It's too hard. But the fact of the matter is I am a very simplified person because I'm so dedicated to business, that I don't know when this thing flicked in my head. And I want to kind of just relate this kind of back, but I had this thing that flipped in my head, and I don't remember when it was, but I didn't want any material thing to take up any thought in my mind whatsoever. I always felt like being rich is freedom, and freedom isn't like being rich isn't having money. It's just having the freedom to just do what you want when you want to do it. And unfortunately, it's material items that hold you back. And this is where, like, me and my wife kind of get into some interesting discussions, because she grew up in a world where she didn't have stability because her dad was traveling around. She had to move around a lot when she was a kid. So she didn't have a lot of, close friends. She was constantly bouncing between schools, traveling. It's just the way, her dad, built up their wealth and all that stuff in their business. So she gets attached to things because it gives her memories of these different times, right? Whereas I kind of grew up on a farm. She was joking that I only left my childhood house realistically, like, a few years ago, whatever. So I lived there like most of my life, and she never had that, right? So I don't have this attachment to things because I got tired of things, and I don't want a car. I don't want a nice car. If I can't write my car off tomorrow, I don't want it. If I have to buy a Lambo, I'm going to worry about it. I have to cater to it. I have to care about it. I don't want that in my life. I don't want any material things. I want to know my house can burn down tomorrow, and I got no regrets. I got nothing to worry about. I want to die like that. I don't want to have to give a crap. It's like those women that go to Starbucks and post about their drink every day. That's like the difference between, like, I was just reading a thing that was so funny, because there's a difference between uber wealth and people who are just like upper middle class. Upper middle class people like to show off things. They like to get the newest iPhone. They like to take pictures of their food in their Starbucks. Ultra wealthy people don't do that crap. They just don't. You know what I mean? Like, look at Mark Zuckerberg, who was trying to bury what he was doing for so long. And you guys should look in. Somebody leaked that he's building this crazy bunker in Hawaii that's going to have like crazy, like multiple, like, I don't know, like 9 or something levels below. That's basically like, they're building a huge farm in this dystopian place in case of like nuclear warfare, God knows what for. That it just shows you there's a big difference. These guys are showing up like Elon Musk, and they got regular clothes on. They're not dressing in suits and all this stuff. I mean, like, that's uber wealth. So there's a big difference between the two, right? I'm not saying that I have like an uber wealth mindset. I just hate things. I don't like things. They just take up my mind. And I think it just detours you from long-term freedom. And I like traveling. That's what I'll spend money on. But, these shirts, everything I'm wearing is like, it'd be a good exemplifier. It's not like I'm wearing nice suits or any of that crap. It's all fake money, 100%. Money is not a thing as much as it is an idea, right? It's just a transfer of energy. And it's more of a psychological thing than it is, a physical, tangible thing, because it just sits there and it rots over time because of inflation, right? I don't think people understand kind of what real money is, right? Yeah, I'm 3 doubles away from $10 million. Exactly. But are you going to live long enough? That's the real challenging question, right? It's the how much effort and time do I want to put into getting rich versus how much time I have to actually enjoy the money, or at least if not even necessarily enjoy the money, but just have the freedom to continue to do what I want. Because that's the hard debate. Most people grind so hard they kill themselves doing it and wipe decades off their life, right? And then in Warren Buffett's case, if you can live that long and you enjoy doing that, you can probably attain hundreds of millions of dollars. And I mean, a lot of people do. You look at Ben Malla, like Ben Malla, that real estate mogul is what, like $500 million in real estate value. But look at how old the guy is. He's been doing it his whole life. He just never stopped. Most people look at a retirement date and that's it for them. But I don't know. It's an interesting discussion, right? Because is that somebody you think you can be? Do you think you can continue to do business for that long? Or are you somebody that looks forward to retirement? Because the second you hit retirement, there's no more wealth building, right? You can continue to build wealth because hopefully you're not drawing against all of it. But I mean, you got to be a little bit more cognizant of it all, right? Great show, Casual Chronicles. I enjoy that. Yeah, I'll have to check some of them out. I think what was the one that I think Jeremy or somebody was talking about, one of the shows with the Palantir boys. I'm trying to keep it key before I get banned. I don't think I print money. I definitely don't think I print a lot of money. I think Maddie's probably printing a lot more at his job than I'm printing at my job. Who knows? I won't lie. I do enjoy sitting with my wife, chit-chatting and sipping a tea in Starbucks. Yeah, I mean, there's nothing wrong with it if you enjoy it. It's just not my vibe, right? I don't know. I make coffee at home. I'm literally drinking like instant coffee every day. I eat fairly healthy. Like there's one thing I don't chintz on. It's good food, like salmon, fish. Like I like, and it's not even expensive. We were just joking about it. Like, I calculated the cost of my meals. Now I'm getting to that point where I'm like, how much does it cost me to eat out? I'll go out with friends and I don't think about what I'm paying. It's nice to have that kind of money that, like, even living in Toronto, we still go out and eat and I don't think about what it's going to cost. And sometimes we'll pay for it or whatever. Like, it's nice to be at that level at least. But, when I look and I'm sitting at home eating a full salmon dinner, and I'm like, damn, this is like $6 or $7 when I work it out. And when we just went out for dinner, it was like $40 or $50 for the same frigging plate. And it tastes just as good at home. I'm like, you start going back down that frugal mindset. Instant coffee, get a drip machine, please. I have a French press, but I'm honestly pretty lazy. I mean, I was just going to eat junk noodles today because I felt so terrible. And thankfully my wife made me like proper food. She's like, what are you going to eat for lunch? I'm like, instant noodles. She's like, can't eat instant noodles. So she made me eggs. She's a blessing and a half. But yeah, all in all, I mean, they kind of, it's kind of interesting. And I'm next year, especially, I want to start doing further breakdowns of kind of the business stuff that I've been doing. Cause it's kind of dystopian to me to kind of get into this level of like income. And I know a lot of people were shocked by it because I'm still kind of shocked by it. But, with private equity and all the stuff that I made this year, like we're probably sitting pretty close to $250,000. Probably about 150,000 in cash or whatever, but, split between corporate income and like personal job income and stuff like that. I don't really talk about it as often because it feels like icky to talk about income. And I still feel like I think it's a good education piece because I don't believe that I'm making that kind of money. I was joking about it with one of my friends because it's like the more money you make, the more dystopian it feels because it feels like nothing in your life has materially changed. Maybe it's just because I'm not a material person per se. But yeah, that's why I think it's going to be very likely that we should easily surpass $1 million net worth between us next year. Cause my wife has a full-time salary job and like, I'm working like 3 jobs. Like we're all just working relentlessly. So, so I was spending so much money on coffee that I did the math and it was, cheaper to buy an espresso machine. So here's the problem, right? Depends on how old you are. And this was what I was discussing with my aunt yesterday, because my aunt's like 95 and we were talking about wealth building and all this stuff. And she's a gem and a half for 95. She's like 25 years old in her mindset. And that is that a coffee isn't cheap. There's nothing cheap about anything when you're young, because that's the problem, right? And it's not that I think this way about it at all, but not as much now. But when you're buying a $5 Starbucks, it's not $5. It's the potential of that money's compounding effect over a 30-year period, especially if you're only 30 years old or 20 years old, right? And, every time, the younger you are, the more that coffee is truly costing you. That's why it's so important to start younger, and even little bits of money will go a lot farther. But yeah, I don't know. People enjoy things, man. I enjoy things. There's things I waste money on for sure. It's just not coffee. And other stuff. Do you have kids? No, I don't even know if we're going to have kids. I joke about it with my wife because her biological clock's running out, but I'm like, I'll be good till I'm 50. If I want kids at 50, I could have kids. No, I'm just kidding. But, I have no plans right now. We debate on talking about having kids. We can afford to have kids. it's like one of those things where if my wife wanted to have kids, like I'd gladly give her kids. She's just not in a rush for it. And I could take it or leave it in my life. I'm not as concerned about it. I'm not like Elon Musk, where I'm just going to knock up 5 or 10 different women and not care about it and just pay child support. But yeah, that's a tough question, right? I think a lot of people, sometimes kids save people's lives. Sometimes kids motivate people to make more money. Sometimes having kids is great on that aspect of it as well. I just don't understand. It's just weird. That was another big conversation. My aunt and I were having was like, why is the population rate dropping off so much? Why are people having, less and less kids? Like, why are we considering it? I mean, I feel like it's taken us to our 30s to start getting our lives together, which is way too long. I feel like maybe it's just wealth disparity. Like, what happens to capitalism if we keep on the pace we're going? Are we going to head into a civil war? I mean, it's an interesting discussion, right? Like, if you look at the path we're going on in a capitalistic society, the division between the rich and the poor is getting absolutely extended, and it's only going to get worse. And, minimum wage has got to expand. If it doesn't, like, you're going to end up back into a civil war, because the disparity is just going to be so damn great that the bottom half, and you're seeing it. You go to places like San Francisco and LA, the homelessness is just getting nuts. And like, why are so many people just giving up? And I mean, you get it. It's hard. It's super hard today. So we're blessed because, I mean, we were born at that era of luck, because, if you were smart enough to be investing like several years ago and just kind of getting your life together, you had the best decade in stock market history. And if you bought real estate or anything, you've been doing fine. But the problem is now, if like you got caught in that trap of student loans and you went down that path, like you're in this exponentially harder place because you spent your 20s getting educated and you pray to God you got a job at it that paid well and justified it. But a lot of people got caught in that trap where they're paying off those loans in their 30s, and I could see that hopelessness and despair come into an environment like this, and it really makes you question, man. Like, is that the reason a lot of people aren't having kids? Like, what is the more luxurious life gets in these kind of capitalistic societies? We go through these damp periods where immigration is the only solution to GDP expansion. I mean, you got to really think about it from like, a government standpoint, and like, why we have immigration and why countries try and do things, and why Kim Jong-un is complaining that they're about to lose their entire civilization because they don't immigrate. Nobody wants to live there, and ain't nobody having kids. But why is it happening there just as much as it's happening here? And they're two very different societies, right? It's just such a weird, interesting conversation to be had. Yeah, my kids pushed me toward being financially free. Yeah, a lot of people. My buddy said he'd be dead if it wasn't for kids. He's a millionaire. He's in his 40s. I mean, he said he'd probably be dead if he didn't have his kid. And he had his kid when he was like 19 or 20 or something like that. Like, it completely changed his life. Canada's GDP is essentially a giant pyramid scheme. Yeah, I don't know. You'll never notice that, with all the problems here, there's never a discussion of cutting off immigration. It doesn't matter. That is the problem, is immigration. Like, we don't have the infrastructure for it anymore. But at the same time, like, there's probably so much self-interest in the economic food chain that, it's driving a lot of the immigration because people have certain advantages to it. And that's another big thing with paranoia and these kind of market environments. It's hard to remain stable-minded. Because so many people I notice are getting caught in conspiracies and financial conspiracies and all this stuff. But realistically, you just got to presume everybody's out for themselves. Everyone has self-interest in government, all the decisions that come through politics. If we could vote more or less on more, like, think of it this way. If I feel like my vote's a waste of time, you feel like when you're voting today, it doesn't mean much. But if we could vote on individual policies that directly reflect how cash is being spent, because if you understand how like tax dollars work in Ontario, where I live in Toronto, like, it's based on municipality. So Toronto gets a budget based off obviously off the tax revenue from real estate and expenditures and businesses and whatever. But then you have other municipalities, smaller municipalities like Durham region and York region. And it's really annoying because these different municipalities make different incomes. Like, if you go to Markham and Richmond Hill, parts of the GTA and York region, they make a lot of damn money. Like, those regions, they bring in a crazy amount of money, and you see them spending it because they have budgets they get to blow through, and they spend those budgets on frivolous, stupid crap. You see it all around you. It's like, because it's such a rich neighborhood, they get more money to spend. And it kind of disproportions money towards, say, Oshawa or Durham region. And you see it greatly. Like, and the other thing that bothers me too is I grew up in a small town, and it's kind of disgusting that, the parks kind of fall apart. There's not a lot of maintenance on a lot of stuff. Yet the nicest building in the entire town is the municipal building with nice floors and elevators. They all have new computers and TV screens. And it's like, what the F? Like, why? Like, why does like this building and these people get the best salaries and the jobs? Like, why can't we vote on how that money is spent? I think it would make a much more material impact because it's just, it always has, right? I mean, you take a look at that study where they took jelly beans, like thousands of them, in this massive jar, and they put them in a mall. And everyone got to vote. And after like thousands of votes, they tallied up. And the median of all those votes, from the lowest to the highest, all the way down to what was the closest median, was off by 1. And it just like, it makes you presume that like the fact of all opinions coming together make a better decision than the individual does. That why are we voting for individuals, and why do we have like small groups of parties making vastly impacting decisions for the rest of us, when maybe, you know, if I was younger and I wanted to learn about politics and money, if I could directly vote and make a difference in how that money is spent on societal changes. Because like teachers, nurses, they need to be making 6 figures. Like the people that actually make a difference in society don't get paid enough. And that's where you get people like me and like capitalists that want to go out and invest in the things that make money. And it's computing and AI and cloud and all this stuff. Like if you want to be rich, you're not going to go become like, you know, a nurse. Unfortunately, it's like, if you're a nurse, you need to be investing that money, but you ain't making 6 figures. And it's an effing shame. Like, it's sad that the most impacting things on society, the people raising the next generation, people who go, teachers make good money. No, they need to make more money. Like they need to be easily making 150 or 200K a year. Like, I don't care what anyone says. Like, they need extra money. They need to be spending it on extracurriculars. They need to give a shit. And if you can give more money, they probably give a shit. People would want to be educators. Like, I'm just saying, you know, society, capitalism, it's not perfect. It works, but my God, it's an interesting philosophical discussion for sure. I grew up a population by 440K-ish in total. I grew the population-ish in total. What are you talking about? Did we take in 300K immigrants this year? Yeah, I think it was a record in Canada. We took in a record. I think it was 1 million last year or something like that. It was something stupid. It was a record, which again is what's causing a lot of these disparities. But I don't have the house for immigration. Yeah, that's housing, I'm sure. Canada's GDP is essentially a pyramid scheme. We'll get through a few comments, and I'm just rambling because I'm sick. It's my philosophical debates that go on when you're delusional is frigging hilarious. And I got to finish up here because I'm going to go pick the wife up. But still, like, much appreciated, my guy. Instant coffee and get a drip machine. I might be one of the only rare wealth generators showing. Sorry, it might be one of the only rare wealth generator shows on YouTube. Yeah, hopefully you're not talking about me too much here. I think everyone's kind of got to figure out their own sense of this, but I just kind of want to recap too, right? Imagine spending 10K to save a few $100, a few hundred on coffee. Yeah, no, for sure. But yeah, I'll just kind of recap a lot of this insanity, right? These 4 pillars that I think are going to be crucial to everyone watching this, and stuff that they're just not teaching in school correctly. Again, I wish I should have recorded the conversation I had with my aunt, because it was wildly in depth, because we were talking about the lack of education with financials and investing. And my buddy's daughter, when I was in school, I didn't get educated on stocks, but my buddy's daughter in high school, she got educated on stock market investing, but in a very terrible way. I was kind of pissed off about it, because they had 3 months through the semester to invest, and whoever made the most money in their practice accounts would win like a few $100s. And I thought it was the most stupidest thing ever. Just teaches them to gamble. It's not long-term investing. But you know, the fact is everyone's gonna have to figure out those 4 pillars on their own and work their way through it. And you know, when you've kind of gone down one of those pillars in a very troubling way and you don't have them balanced, whether it's gambling, whether it's marital problems or dating problems, you know, whether it's the way you invest and how you invest in your long-term outlook, like all these things, right? It makes for a fun conversation for sure. But I hope you guys have a Merry Christmas. I appreciate you all hopping in. If I feel better, I do want to do some more videos tomorrow, perhaps another live stream that's a little less convoluted and psychologically diluted, because my brain is just flopping today so bad it's not even funny. I don't know if I'm sick. My wife's like, "You're going to get COVID test." I don't want to get COVID test. I don't feel like I have COVID. I'm just super tired. But we'll find out, and we will get back to you. But if I don't see you guys, Merry Christmas. I hope you guys spend some time with the family. Stay cool. Stay awesome. Peace.